Hello and welcome to another episode of Darwin Investors. Yeah, I'm sitting around the house today. Got a lot to do and noticed there wasn't much on television, so I decided I'd make a little bit of TV. People don't seem to be too excited about this week in earnings, and understandably so when you see the list of companies. However, there's always a way to go out and make some money. I always try to find a way, whether it's a bull market, bear market, bad week, good week, whatever. So let's have a look at the week ahead. So coming up this week, this is the reason why people aren't that excited. We got a lot of money losers in here, and money losers aren't particularly popular at this time. You know, they tend to go down on earnings rather than up. Activision Blizzard is a money maker. On Semi is one I'm really interested in. Pinterest is one I could make a play on if it comes down. Airbnb the same. PayPal not interested. Match Group not interested. Uber money loser. EA money loser. SoFi money loser. AMD is one I'm interested in. Booking Holdings is I'm not interested in. It's like $2,000 a share or something like that. eBay, not interested in. Money loser. Fortinet. Okay, cybersecurity. Then this is actually a money-making cybersecurity company, maybe the only money-making cybersecurity company. This is a possibility for sure. Block, not interested in. Dropbox, they do make money, but I'm not interested in it. Datadog, money loser. Alibaba, not interested. Paramount, not interested. Lyft, money loser, money loser. Okay, so I look into the earnings calendar and let's go ahead and see the ones that I will actually be making plays on this week. All right, so first on my list just has to be on semiconductors because I already have two puts sold against them. I collected $158 in premium with a $60 strike. It expires on the 5th of August. When I look at On Semi, we're looking at a company that swims in the same exact waters as NXPI. NXPI just had a very nice quarter that they reported last Monday. They're both in the business of manufacturing semiconductors for the automotive industry as one of their primary sources of revenue. They report on Monday before the market opens. They have a consensus earning of $1.26, which has not changed since the last time people made estimates about their earnings. Despite the nice report from NXPI, they treated a very reasonable 20 price to earnings ratio with a forward PE of 13.7. Their expected profit margin is 20% and a year-on-year EPS growth forecast is 17. When we look at their technicals, they're trading pretty high. I sold my puts down here at 60 bucks. We'll see. That does seem to be an area of support, or excuse me, yeah, of support. They're pretty much bumping against resistance. We'll see what happens. Their earnings are going to do a lot. I might be buying my way out of these. We'll see. Okay, next on the list is going to have to be KLIC, Kulik and Sofa Industries. Kulik and Sofa is just like Taiwan Semi, except for that they're based out of Singapore. These guys are trading at $48. They traded a very reasonable price to earnings ratio of 6. Their earnings consensus is $1.60, which has trended upwards from the last earning consensus of $1.46. I'm guessing that that's based on the success that Taiwan Semi just had and the demand for microchips at this time. They have a 28% profit margin, a 20% year-on-year growth. When we look at their technical chart, we're seeing a company that is kind of near their support here. I think I'm going to probably be selling maybe $42, $43 strike puts against this company. Again, they report on Wednesday after market, so I'm not sure if by then the whole market will come down. I might have a chance to sell some maybe $42 or $43 strike puts and collect some decent premium on these guys. If not, just buy them outright and watch them go up after earnings. All right, so next on the list is going to be Airbnb. They're currently trading at $110.98. They're going to be reporting earnings on Tuesday after market close. The consensus earnings is 44 cents and says that mean has not changed significantly as the end of the quarter nears. They do have a price to earnings ratio. Of course, they're disrupting the hotel leisure business and they're growing at looks like a really good clip here from 95 PE to a forward PE of 58. We're seeing that they're expecting a profit margin of about 12%, which is not bad. When we look over here at the earnings whispers, they're expecting 56 cents instead of the consensus of 44 that was listed by Charles Schwab. We can see that they're implying a 9.5% move on earnings, which would actually put them anywhere between, say, $120 and $100. If these guys go down before they report earnings, I'll definitely be selling a put, and I'll be looking at probably about a $95 strike. All right, the next company we're going to be having a look at here is going to be AMD. They trading right now at about $94.47. It's a company that I currently own, so I can sell covered calls on these guys if I wish. The consensus earnings is going to be $1.03 a share. They're reporting after Intel just had a miserable quarter. It could either be that people that provide semiconductor chips for PCs could all be going down, or it could be brand specific to Intel. I'm thinking that a lot of the problems that Intel is having is largely due to AMD. I'm thinking that their customers are going this way, and that's why I own the stock. Their price earnings at 35, forward P of 21 and a half, with a healthy profit margin of 17.94 and a nice growth forecast of 28. They also recently purchased Xilinx, which is bringing them into the data, more into the data center, and they use the EPYC server chip in their data center product line. If we look at their technicals, AMD is here trading here at about right here. It looks like they have support right around $84. If they come down before Tuesday, say down to say 88 or something dollars, I might start selling some puts here around $81. I don't see myself selling any covered calls because I'm not going to get any premium. The resistance seems to be about $110. I expect that they're going to post a very good quarter, and so they could blow right through that, and I hate to cap my upside. So AMD is not one I'm probably going to sell any options on, unless of course they come way down before earnings, in which case I'll be selling puts. Next on the list of companies that I might be looking into buying a little bit of shares or possibly just selling puts on is going to be Fortinet. They're a cybersecurity company, and what makes them special from all the other cybersecurity companies such as Palo Alto, Zscaler, or CrowdStrike is that they are profitable. That's why they have a B rating as opposed to a D or an F. They're trading at $59. They report on Wednesday after the market closed with an expected earnings per share of 22 cents. That's down from $1.09. That is not a good sign. Shows here that they have a profit margin of 18%, a growth forecast of 20%. This is one that I may or may not take a chance on, but let's go ahead and have a look at their technical charts anyway. They're trading here at about 60 bucks. It looks like they have nice support at about 56. If before earnings they come down to about 54, I'll probably sell some puts around say about a $52 strike. It's not one I'm gonna be overly aggressive on. It's not one, definitely not one I'm gonna be buying shares on, but I might take a stab at some puts and see if I can't make about 50 or maybe even $100. All right, so next on the list is going to be Caterpillar. Caterpillar trades at about $198. It's risen sharply in the last couple of days. They traded a very nice price to earnings ratio of 16. They are expected to grow despite the slowdown in housing. So that's what the market's expecting. They're expected to have consensus earnings of $3.01, which is not immediately changed. And they're expected to announce their earnings Tuesday before the market opens. Let's go ahead and have a look at their technicals. Well, Caterpillar is expected by Earnings Whisper to have $3.14 a share, which is slightly higher than the $3.01 consensus here on Charles Schwab. We look at them, they have volatility of about 5%. They're currently trading at $195, so that would imply a move, about a $10 move up or down. If they go down to about $185, I'll go ahead and sell more puts. It's a company that I have been dabbling in. I wouldn't mind owning Caterpillar if it gets sent my way. That's part of the trick of selling puts on companies. You have to not be bothered with owning them should it really not go your way at the price that you decided that you would buy them at when you wrote the contract. You can see they've gone up really in a straight line here in the last couple of days. They're definitely trading near a new area of resistance. If they do come down prior to their reporting earnings on Tuesday, say down around, I don't know, about like right here, about 183, I'm going to go ahead and start doing some $175 strike puts. I don't see they're going to come down there that far. I'm probably not going to play this But should it come back down, should Monday be just a horrific day on the market, this is one that I'm looking at to try and get a little bit more money. Next on the list of companies that I might be going to play on is going to be Marriott. They're trading for $158.82 a share. We all know what they are. They announce their earnings on Tuesday before the market opens. The consensus is $1.56 a share. They trade a little bit rich, say $35 is the current PE with a forward PE of 26. That means even if they report really good earnings, they may or may not move, much the way that Visa didn't move. Nevertheless, they could come down in price and I might be interested. They have a profit margin of almost 10% and an EPS growth forecast is very high at 39%. When we look over here on Earnings Whisper for Marriott, they're expecting a price per share of $1.66 as opposed to $1.56 that was reported by Schwab. They have a very good sentiment going into earnings. They're expecting 5% volatility on $158, which means they would probably be expected to be anywhere between $166 and $151. If they come down to like $151, I might be interested in selling puts on this particular equity. But let's just see how their technicals look. All right, so they have an area support about $150. I wouldn't, unless they come down to $150 and I can sell puts to say $141, I'm not going to be interested. So this is going to be very dependent on whether or not they come down before earnings. But if they stay at this level, I'm definitely not going to be interested, but it is one that I'm going to be keeping an eye on this week. All right, so one company that I definitely will not be spending any money on or investing in this quarter is going to be Square. I bring it up though because people seem to be interested in this company. They also go by the name Block. They're currently trading at $76.06 a share. They're graded F by Charles Schwab and with good reason. They report on Thursday after the market closes and they are expected to make 16 cents a share, which is another reason why I bring them up. They are currently profitable, it seems, although they do not have a price to earnings ratio, but they are expected to have one next year. Their current profit margin is negative and they are expected to have a decent growth forecast of 13.6%. But these aren't the reasons why I dislike this company. I like the fact that they are doing the payment processing at small businesses. I do go into places and notice their hardware is installed in certain places, although I am noticing that Clover is a little bit more popular at the moment, Clover being owned by Fiserv. But one reason why I don't really care much for Block is when I went into their 10Q here, and this was their 10Q that for the period ended March 31st, 2022, you can see that they have a lot of their revenue coming from Bitcoin. You can see that a lot of, like their transaction-based revenues like $1.2 billion last quarter, and their Bitcoin revenue is 1.7 billion. If you look at their the quarter ended a year ago, their transaction revenue was 959 million, and their Bitcoin was 3.5 billion. So they draw an awful large percentage of their total net revenue from Bitcoin exposure. Now remember, this was the quarter that ended on March 31st, 2022. If we go to look at the chart of where Bitcoin was on April 1st through June 30th, we could see that on April 1st, Bitcoin was trading at 46,000, and on the 30th of June, Bitcoin would have been around 27,000, or down about 56% right here. So for this quarter, they're down 56.8% on Bitcoin. And because they draw so much of their revenue from Bitcoin, Block is definitely going to be one that I'm going to be avoiding this quarter. All right, so the next company that I'm actually not likely to invest in, the one that generates a little bit of interest from people, is going to be Starbucks. They're currently trading at $84.78. They're rated C by Charles Schwab. They're due to report earnings on Tuesday after the market closes with a consensus earning estimate of 75 cents a share. When we look over here at their technicals, we can see that they're trading at near a new area of resistance. And so again, I'm not crazy about selling puts against companies that are trading against their areas of resistance. I much rather do it against the areas of their support. Should they pull back to like $76 or even $78 before they report on Tuesday, sure, I'll go ahead and sell some puts here at about 73, we'll say $72. But it looks like right now this is not going to be a company that I'm going to be investing in. Though they're not a particularly, they're not like richly valued as they used to be, obviously at $84 a share versus $130 a share, what have you. They're currently trading at a price to earnings ratio of 22. They are expected to shrink this year. They are having problems over in China with all of the COVID lockdowns, and they are dependent on a very large amount of their business coming from around the world. So I imagine they're going to run into some FX things. And of course, the China lockdowns are going to affect them in a negative way. They are expected, though, to have a good price profit margin, about 14%. That's to be expected when you're charging $7 for a coffee. And they expected still to grow, even though they've pretty much been all over the world. I don't know where they're going to go, but apparently they're going to make more. And finally, one company that I am definitely interested in is going to be Pinterest. And I'm thinking this is a pretty sneaky play. They got dragged down in the whole Snapchat debacle. However, they are a very different business from Snapchat. They do a lot of arts and crafts types of web postings that primarily are tailored towards women audience. They also are getting into like online shopping and that sort of thing. So you can start buying products through them. They're going to have a little bit of trouble monetizing this in other markets other than in North America, because the people in other countries have become so accustomed to having it for free. That is going to be a problem. However, this company is growing. They do have a price to earnings ratio of 36 with a forward PE of 21. I do a whole other video on Pinterest. I'll leave like a link on the upper left here, I believe, at the end of this video. They're going to report on Monday after the market closes with a consensus earnings per share of 18 cents. If we look at their earnings whisper calendar, they're expected to have 21 cents a share. They're expecting a pretty big move of 16.7%. But when you're only selling for $19.22, that only represents about a $2 move up or down. If they do come down to about $17, I'll probably be buying these guys as well as selling puts on them. If we look at their technical chart, you can see they've been trading right down here in a down channel, somewhere here between $17 and $20. They're at the upper range of that right now. Again, I would be looking for that to come down a little bit, hopefully, and then I can go ahead and buy some shares and sell some puts on it. But if they stay where they are, I'm still willing to sell some puts, depending. You know, if they're like $20 a piece, I'll sell them. But I'm not going to be selling them for like $7 a piece or something like that. Because why would I take a risk of buying a whole bunch of Pinterest shares for $7 premium? All right, that's going to do it for today. If you got anything on this video, yeah, please like, subscribe, hit that little notification bell. Hopefully I put something good on TV today. Anyway, we'll see you next time. Have a good day. Bye.
Because I like money. I'm sorry.